Today, we will talk about the joint return test. The joint return test is one of the IRS tests that potential dependents must pass in order to be claimed as such by another taxpayer. The joint return test stipulates that no dependent can file a joint return with a spouse and still be claimed as a dependent on someone else's return, such as that of a parent or guardian. There is, however, an exception to this rule. Because claiming dependents is valuable, the IRS institutes several tests, such as the joint return test, to make sure that dependents aren't being double counted. According to the joint return test, a taxpayer filing a joint return can be claimed as a dependent under only one condition: that person and their spouse file the joint return only to claim a refund of income tax withheld or estimated tax paid. A taxpayer may not count someone who is married and files their return with their spouse as a dependent, even if that person makes no money during the tax year and lives in the taxpayer's house if their spouse made taxable income reported on their joint return. The modern income tax was first introduced in 1913, and a deduction for dependents was added to the tax code 4 years later. That Congress has supported a deduction for dependents for so long is a reflection of its desire to support the option to have a large family, while still maintaining the overall progressivity of the federal income tax regime. The original income tax was quite progressive, with only about the top 1% of incomes taxed. But with that progressivity came a bias against large families, which generally require more income to support. Here are 3 key takeaways. 1. When deciding if someone who has lived in your house that you have supported and who has not made any money is a dependent, you must apply the joint return test. 2. In most cases, you can't claim someone as a dependent who is filing a joint tax return with someone else, usually a spouse. 3. One exception is if neither the person you claim as a dependent nor their spouse made enough income to be taxable, but they filed a return to get reimbursed for wages withheld. Hope this would help. Thanks for watching.